Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. And I've been getting so many people coming to the channel going, Carter, I want to start day trading, but I don't know where to begin, what to do, what it is. So in today's video, we're going to be just taking a step back and really showing you a step-by-step guide on how you guys can start trading. We're going to be showing you guys everything from brokers to strategies to things you must know. So I hope you guys all enjoy it. If you do, smash that like button and subscribe. And if you want to learn more about trading, like how to find undervalued stocks, different strategies, approaches, mindsets, everything, check out our school. It's like a college class, and we have a limited time sale for 50% off using code LEARN. So sign up. I'll see you guys in there. And let's have a quick word from our sponsor, which is absolutely the best trading broker that I use. And I wouldn't recommend something that I don't use, so check them out down below. I know a lot of you are just getting started with investing, and one app that I've been using is called Moomoo. It's super beginner friendly, but still gives you pro level tools like live market data, easy to read charts, and news all in one place. And the best part, new users can get up to 60 free stocks when you open up an account with qualifying deposit. And honestly, that's actually why I tried it. And I've been using it ever since. Check out the link down below if you guys are curious. And yes, the broker is Moomoo, so make sure you guys sign up. It's completely free to do so, and you guys can get up to 60 free stocks. So it's free. Sign up, and I'll see you guys in there. And let's jump into this here. So, all right, day trading. What is day trading? So, in simple terms, we're going to be showing you guys here everything. We're going to be showing you guys what day trading is, how the stock market works, key players in the market, basic structure, trading hours, risk and reward, and setting expectations. So what is day trading? So day trading is buying a stock and selling it during the same trading day. So this is a stock here that we traded in the past. As you guys can see here, we took a short on it, betting for the stock to go down, and we'll cover more about that later. But betting for this to go down, and you guys can see it covered really, really nice. So in simple terms, day trading is different than swing trading, because swing trading is where you buy a stock and you hold it for more than a day, but less than 1 year. On average, I hold my swing trades for about 6 to 9 days, and on average, I hold my day trades for about an hour or so. Now, moving on here, how does day trading differ from other trading strategies? So in simple terms here, day trading is obviously during the same trading day. So you focus on more short-term price movements. There's no overnight hold, so it reduces exposure to after-hours risk. You can easily capitalize on volatility and liquidity, and you can day trade stocks, options, futures, forex, and crypto. So you guys can see the chart down below of pretty much how it works here. So day trading right here, swing trading right here. And the only thing that differs is going to be your holding length. All right, so the next thing here is how day trading different from other strategies. We kind of talked about this here, but day trading, fast-paced, in and out. Swing trading, holding for days or weeks. Investing, you're holding for years based on fundamentals. There's a variety of different ways to analyze a stock. There's two main ones called fundamental analysis and then technical analysis. Fundamental analysis is using like the revenues, the cash flows, the EPS to evaluate the stock. Trading, you really don't care about the company. You pay attention to more technical indicators like support, resistance, different, moving average lines, RSI lines. And so, each person is going to gravitate towards different things. Some of you are going to go day trading's way too hard. Some of you are going to go, I don't have time to day trade. Maybe I want to try swing trading. Some of you have probably time and you want to day trade. There's each person has a different, different aspect to try to make money. But let's continue to move on. So why a lot of people are attracted to day trading is because the potential to replace your 9-to-5 income. That's why everyone day trades. I don't care. That's why it's number one on my list. Everybody trades to quit their job. Everybody trades to make money. There's no one I know that trades to lose money or to break even, right? It doesn't make sense. So everybody's against each other. That's one thing you have to realize is everybody's against each other. So there's different ways where some of you can, we'll talk about it more here in a minute, but let's go through here in a sec. So the next thing is freedom to work anywhere, because you guys can have like that nomad, the laptops lifestyle. No boss, you're your own CEO. You can start smaller with a smaller amount of money compared to other businesses. And every trading day represents a new set of opportunities. All right. The harsh reality of traders. So I'm sure you've heard those statistics of 80-90% of day traders fail in the market, right? We've all heard them. Now, you also have to ask yourself why, right? So I want to talk about this here for a second. Why do day traders lose? You've heard those statistics. In my opinion, you see and hear those statistics because of the barrier to entry. The barrier to entry to day trade is extremely low, right? You can open up an account today and start trading tomorrow. And then if you lose money, you're in that 90%, right? It makes sense because you haven't had years of practice, years of hard work. Imagine your doctor or the engineers didn't have to go to school, right? It would be terrible. Trading, you have to have that same approach, right? You have to invest into education. You have to invest time into paper trading and learning and building a strategy. You got to just try to actually treat it like a job and not like oh yeah, I might trade today. I might look at the market. No, you got to analyze all the trades, everything. So most beginners lose money because poor education, no risk management, and emotional decisions. So I think that's very important because a lot of day traders and a lot of traders in general, they trade on emotion, right? Of FOMO, fear, greed, all of those. And they're all powerful, right? It's an emotional roller coaster of fear, greed, and overconfidence. But you got to also treat it like a college, right? Building, takes months and years and not days. And that's one thing you got to realize. All right, so how the stock market actually works. So in simple terms, the stock market is just the marketplace where buyers and sellers meet electronically or physically in the New York Stock Exchange. How a stock works in simple terms is you're a partial owner of that company, right? So if you buy a share of Coca-Cola, you're a small owner of that corporation. So as the company does well, often that share price will go up because they'll bringing more revenue, which will make it more attractive, and the demand of the stock will go up. So this is one thing I always want to talk about is just basic supply and demand. And a lot of people don't realize this, but that's all the stock market really is, right? If you have a low supply, so a low shares available to buy, and a high demand, that stock's going to go up. On the flip side, if you have a low demand, right, and a high supply, that's where you have those very cheap penny stocks. So often stocks are going to be trying to find in this, middle ground where you have a significant number of buyers and you still have a lot of shares available to buy. So you guys can also look at the basics of the supply zones and the demand zones. So you guys can see that we have this base here. This would have been a good approach here. So you see that low volume test where we have the decrease in volume, right? And that's where we have the good sell-off. Pops back up to that old support, which is often, a new resistance, which we got a good entry point. So, and then the flip for the demand zone. So stock prices equal a reflection or belief about future value, not necessarily real value. So the next thing here, we kind of talked about it. What's a stock? Just an ownership of a company here. Shareholders believe in the company and they make money off two ways: appreciation, so where the stock value goes up, and then off dividends. Stocks are influenced by a company's earnings, industry trends, economic health, and different investor sentiments. So the next thing here is how stock prices move. So they can move from a variety of reasons. Basic supply and demand that we covered. So, if you have a high supply and, a low demand, price falls, flipped. right? Demand is high, supply is low, price rises. But also a stock will move, break, out of some sort of news, right? If they release like a new product, if they get some sort of FDA approval, whatever it may be, often you can see those stocks squeeze up. And then where I pay attention to it is really, really heavily here is on the technical level. So like basic support, basic resistance. And it's important to look at all of them, before looking at, buying a stock. So there's two ways to make money from day trading, right? Going long is meaning just buying the stock, right? You're buying it in hopes to sell it at a higher price. And then going short pretty much means you're betting for the stock to go down, right? You're borrowing the shares from your broker in hopes to buy them back at a lower price. So that's how that works here. So what moves the stock price? So there's a lot of them, right? One of them is company news, like I mentioned. So this was here. Apple stock is getting dumped because of earnings, and they also had a report in here on iPhone sales and all that stuff, right? Which in new products, stuff like that, which caused the investors didn't like it. And then we have economic reports, right? So this is like the CPI report that came out in April that affected the market. Then we also have macro events. So election, wars, major government actions like tariffs. I think we all know played a huge factor of the prices or in all that stuff. So we kind of talked about this here, advantages of day trading. We'll kind of go through that relatively quick. I want to pay attention to this here, the risks of day trading. Financial risk, losing money, psychological stress, over trading, and technology failures. So, if your internet drops, your software crashes, can play a factor in you losing money here. Common myths about day trading, it's very, very good here, is it's easy money. No, it's not. It's very, very difficult. The next thing here is just need one big win. In reality, most successful traders I know make money off consistency, making 1, 2, 3%. And they just do that very, very compounded, right? It compounds. Next one here is trading is gambling. It is, absolutely. Without a plan, it's 100% gambling, right? And I would completely agree with you on that. You got to treat it like a job, like any professional athlete or high-ranking professional, right? You got to have training, practice, emotional mastery. You got to build habits over finding secrets here. All right, why 85% of traders fail? We went through it. No strategy, poor risk management, emotional trading, over trading, no trading journal. I think that's so important. If you're getting started with trading, highly recommended good trading journal because you can find what's working and what's not working. The next thing here is chasing those unrealistic expectations. This is huge. Everybody, wants to double or triple their account. But in reality, like I said, if you have a $100 account and you're making 1 or 2 and 3% per month, you're only making $3, right? And so that's why a lot of people don't like trading and they take these high risk trades because they see these expectations when they're unrealistic. So the next thing here is that they're treating it like a hobby when in reality it's like running a business. Discipline, routine, and review. So this is what a simple strategy looks like here. You guys can see the general, right? The general trend line here, okay, where it hits that trend, getting sell off, good crossover on the MACD indicator, and the stock sold off. That was the same one that I showed you guys in the beginning. So the next thing here is essential tools for day traders. For me, a direct access broker, I absolutely love Moomoo. I know they sponsored this video, but I actually been using them before they sponsored me, before all of that. They offer great tools like paper trading. So if you're just getting started with trading, you can practice, and they do have great scanners so you can find these opportunities. And then you also need a fast, reliable, computer, trading journal, and then some sort of risk management software. I'll show you guys how I do it on Moomoo. after the slideshow. So you guys can fast forward or just stay tuned. So key trading terms to know: bid and the ask price is the difference between buyers and sellers. Volume is just the number of shares traded. Float is the number available trade or number of available shares to the public to buy. Volatility is how much the price moves here. So now here, I want to show you guys this trade that we took today so you guys can see here. So we're on the 5-minute chart. So each candle represents 5 minutes of trading, right? And if we go to the 1 minute, each candle represents 1 minute of trading. So looking at the 5-minute chart here, you guys can see this today. We have this huge push up, right? Great move going up, getting a lot of good buying pressure, all of that. And then we had this beautiful MACD crossover, which actually would have been a really, really nice short if I would have taken advantage of it. But that's the thing about day trading, is you'll never be able to, get in at the best available prices and all that stuff and sell at the peak top. It's very difficult. Very, very difficult. So for me here, you guys can see where it curls down and we hit this move here. If we look, it hits this red line. That red line is an indicator called the 200-day EMA line. Now, the reason I love it is because this has tendencies in the past as getting really good buying pressure on it, right? It hits it, we got buying pressure, hits it here, buying pressure, again, buying pressure. It just has really hard, support there. So now here, as it hits it, I go, okay, let's see what happens here. And it got pushed up and rallied its way up. This little move might not seem like much here, but when I buy about 150 shares of this stock, so this move, right, 1% with 150 shares is like $700. Now here, sells back off, and what happens? It hits that same 200-day moving average line. Okay, that same really, really hard support. Supports have those really great tendencies. Now, we also noticed this candle right here. This is what we call a hammer. Okay, right here. This has great tendencies of getting buying pressure and being a reversal candle. So what I did here is I waited for the stock to push up at higher than the previous minutes candle. So our entry was near and around 321.72, right in that range. So my thought process was this: entering here, keeping our stop loss just below, right, that 200-day moving average line because of the heavy support, for a possible push up to target here at 325, giving a risk and reward of 3-to-1. This is the risk management tool I was talking about, meaning I'm risking $1 to make $3, which is really, really good. Now here, what I did is I went to that 1 minute time frame here. I went back to the 1 minute chart here because I wanted to see how this works here. So I saw it go up and curl down and start forming some nice little trend lines here. And so let's kind of draw out what I kind of had here, right? This was the thought process I had. Okay, so it rallies its way up on this trend. It dips below this at 322, exited the trade. That's exactly what we did. Great entry, great exit, and going to that 5 minute time frame so you guys can see it on here. We can see it has that very close, right? That very close trend line like this here. So, ideally you do want a little more touches on it, but we are happy with the entry, happy with the exit, and happy with profit. Now, we also looked at the RSI here, which was trading for a 36, which is historically an undervalued point for the stock, and it being at about a 56, which is an overvalued point where we sold it. So great entry, great exit, and this is exactly what we look for day trading. So guys, I hope you guys all enjoyed it. If you did, smash that like button, subscribe, sign up with our school. I'll see you guys in there. Make sure you guys like, follow, and I hope you guys have a great rest of your day and take care.